Hey everybody, thanks for so much for joining me. I'm excited to dig into SoFi's latest earnings. Before we do, please click subscribe to my channel if you don't already. And please check out the link you see on your screen from my sponsor, The Motley Fool. It's the best way to support this work I'm doing, and you'll get the top 10 stocks to buy right now. So SoFi just released its second quarter earnings. And if you've been following the stock price, you know that the market's pretty impressed with the numbers. So just to run through some of the growth figures, SoFi has 6.24 million members now. That's up 44% year over year. It added 584,000 members in the second quarter alone. It now has a little over 9.4 million total products, which a product would be something like a checking account, like a brokerage account. So the average member has about 1.5 products with SoFi. That number is up 43% year over year. One of the more impressive things, the lending products, which has been a slower growth area recently. SoFi's really been focusing on checking accounts, brokerage accounts, and credit cards. Lending products are up 25% year over year. That's actually an acceleration in its growth rate. It originated almost $3.75 billion of personal loans in the second quarter. Personal loans made up the bulk of the total, which you might expect. About 85% of the total loans in the second quarter were personal loans. Student loan originations were down in the second quarter, which makes sense because the payment pause is still going on and borrowers were really in wait and see mode. Home loan originations grew, but is still a relatively small part of the puzzle. So on the other side of the business, financial service products, which is bank accounts, brokerage accounts, credit cards, that's up 47% year over year. That's the area that I mentioned, like I mentioned, SoFi has been focused on lately because that's where it really is going to create efficiency in its business. The more people that rely on SoFi for its banking needs, the less it needs to spend money marketing its loans and things like that. It has a natural marketing funnel from its customer base. So on the top and bottom lines, revenue grew 37% year over year. Adjusted EBITDA grew 16% year over year. Both of those were ahead of expectations, including SoFi's own expectations. It beat the high end of its guidance range on the top and bottom line. Looking into its banking business, which has been something that I've been watching very closely, because one of the big parts of my investment thesis is that SoFi just does banking better and is going to keep growing rapidly. And it looks like it is. SoFi now has about $18 billion worth of loans on its balance sheet. The bulk of them are personal loans and student loans. About $12 billion is personal loans. $5.3 billion worth of student loans are outstanding on SoFi's balance sheet. That number could tick up significantly in the next few quarters as the student loan repayment pause stops and some borrowers can benefit from refinancing into private loans. The deposit platform continues to ramp up. Remember, SoFi just became a bank in the beginning of 2022, so its deposit base started from zero then, and it's now at $12.7 billion. It's looking really, really good. It keeps growing and growing and growing at a very rapid pace, and I think the deposit base will match the size of its loan portfolio before too long, which, if you're not familiar, it's really preferable for a bank to be able to cover its loans with its deposit base instead of having to, take out more debt to loan out money. SoFi is generating 9.26% interest, the average yield on its interest earning assets. Its average deposit yield is a little under 4%. Its net interest margin is 5.74%. That's up 51 basis points year over year as interest rates have risen. Yes, the SoFi is paying more money on deposits, but its loan interest rates are going up as well, so it's more than made up for it. Looking forward, SoFi has been saying that it's on track to reach net income profitability in the fourth quarter, which would be the first time it ever did that. It says it's still on track for that, so I am watching. SoFi revised its guidance upward. It's now expecting 30% year over year full year revenue growth at the midpoint, right around $2 billion in revenue. It's expecting some pretty solid growth throughout, and like I mentioned, GAAP profitability in the fourth quarter. So that's what I'll be watching going forward. All in all, I'd give this quarter an A. I'd love to hear what you think. Is there anything that concerns you in SoFi's quarter? And what are you watching going forward? I'd love to hear your comments. I'll do my best to respond to all of them individually. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit
www.fool.com/Frankel to receive the top 10 best stocks to buy now.